It's all about money. With your host, CPA and forensic accountant, Sam Rosenfarb.
You're watching It's All About Money. Nobody knows more about money than accountants. Hi, I'm Sam Rosenfarb. I'm a forensic accountant. I've been an accountant for over 30 years. I can tell you from firsthand experience that everybody in some way on a daily basis is motivated by money. As a forensic accountant, I've been involved in the startup of hundreds of businesses. I've seen people start with nothing and build their business to be worth millions of dollars. I've also seen businesses worth millions of dollars become worthless. This show is all about educating you, teaching you about how money plays an important role in all of our lives. Businesses are bought and sold every day. Our very strong economy has been fueled by conglomeration and strategic alliances. Enormous wealth has been created by this phenomenal explosion. Some business owners are not realizing their full business potential because they stick to conservative business plans that don't include business acquisitions as part of their game plan. This episode of It's All About Money is about educating you about the business of mergers and acquisitions, or M&A. We have with us two prominent professionals in this highly specialized field. Jeffrey Motter is Managing Director of Rosenfarb Winters & Company Mergers and Acquisitions, a company that deals exclusively with mergers and acquisitions. He oversees all client relations in both purchases and sales. Jeff has spent 18 years as a businessman, specializing in sales consulting and marketing, and has used this experience to create a new way to buy and sell businesses. Jeff has the unique ability to put together a marketing plan and a specialized team of advisors to find you the right buyer or seller. Philip Chapman is the senior partner of Chapman, Henkoff, Kessler, Peduto, and Saffer. He graduated cum laude from Princeton University and received his law degree from Harvard Law School. He is recognized as one of the best corporate lawyers in the state of New Jersey. Phil lectures and writes on the subject of mergers and acquisitions. He specializes in counseling family-owned and other privately held businesses in all aspects of business and corporate law, and has turned his focus more recently to the buying and selling of businesses. Phil, when you first started practicing, did you always know that you were going to be involved in mergers and acquisitions?
No.
No? How did you get involved in this?
Well, Sam, over a long period of time, I've been a litigator, a corporate lawyer, a commercial lawyer, a real estate lawyer, a mediator for people who are having disputes, and eventually I decided that I wanted to teach for the Institute of Continuing Legal Education in New Jersey, lawyers at various levels in the area of buying and selling businesses and getting businesses ready. And there's an old adage, when you teach, you learn. And so the more I got into it, the more I assembled co-panelists, the more I realized that this was an area that was really highly specialized, and that I had, with my background being so diverse, I had something extra to bring to the table. So I decided to niche market it, so to speak.
Jeff, how did you get involved in mergers and acquisitions?
Well, I've always been a businessman, and I'm very fascinated with all the merger activity taking place. And you talked to me about the possibility of joining your team, and that's how I got here.
Well, why is M&A a buzzword today? What's so exciting about M&A?
Well, the nature of the deals, they're big deals taking place, huge deals. Every time you open the newspaper or turn on the TV, you're seeing these huge mega deals, and there's tremendous opportunities out there for companies to grow and create value by merging with other businesses.
How is value created by merging?
Well, a lot of times you have synergies where the two companies put together create much more value than when they were individual. The sum of the parts is greater than the individual pieces.
Phil, do you only represent large companies or some small companies also?
No, my practice is really businesses that can be small, medium, and growing. I don't really represent Fortune 500 companies. I represent people who have founded their businesses, people who are buying businesses that are in the next stage where they ought to be sold to someone else.
Does it make sense to buy a business or start something new?
Well, it makes much more sense to buy a business because it's easier to buy sales and create sales from scratch. You have distribution channels in place, you have customers, you have cash flow, and it's much easier.
You get to know that a business has already been successful.
Yes.
But most of these successful businesses we read about have been started from scratch. People in a garage. Bill Gates started on his own, right? And he didn't buy anything. Walt Disney, they didn't buy anything, or Coca-Cola, they didn't buy anything. How do you distinguish that from saying that people should buy something?
That's a good question, Phil. What are your opinions on that?
I don't know if I can bite on that as well as you'd like me to, Sam. I don't think it's an abstract exercise. If there's a particular individual who's watching us and trying to figure out whether, with that individual's financial resources and prior experience, and a team they can assemble to work from, they can start from scratch. They have the working capital to weather even conservative assumptions not being proved out, and even if they haven't done the activity before, they believe that they can master the activity quickly enough before they reach the point of no return.
I find my experience as an accountant, most people start out working for somebody and doing something, and then they think that when they've done it as well as they're going to do it for their existing employer, and they think they could do it better, they start on their own. Is it easier for them to buy something? Is it easier for a carpenter to buy a carpenter business, or to carpentry business, or to start something? Are all businesses available to be sold, bought by a purchaser? What do you think? How should they go about looking for the business that they want? Let's start with that.
I mean, this is going to sound like a commercial for what I don't do. I'm not a business broker, alias business intermediary. But I've become convinced that whether someone is considering selling their business or someone is considering buying a business, that's a special activity in which most people have no prior experience, and even the prior experience of lawyers and accountants has its limitations. So I now believe that someone who is deciding whether to buy a business or start a business, for instance, a franchise business, probably ought to be in the hands of a qualified business intermediary. That term is, by the way, is a more popular term now than business broker, because with business broker, one tends to think of the guy who's selling Evelyn's dress shop.
Do you think of yourself as a business intermediary more than a business broker?
Yes, I think so, because we do a lot more than just the average business broker is selling small businesses, and he's putting an ad in the newspaper or in a journal trying to sell the business, whereas an intermediary will help structure the deal, negotiate the deal.
What is it that your services comprise?
Well, basically what we try to do is put together a marketing plan for the company. If you're trying to sell your business, we try to find a strategic fit for you. And a lot of times
What does that mean, a strategic fit?
Well, we're trying to find a good synergy. Sometimes you may be trying to grow your company, you may lack the resources to capital-wise to grow your business, so we'll find a financial investor that could offer little management experience but lots of capital and let you grow. In other cases, we might find a niche market that neatly fits in with yours that will give you other opportunities to cross-market.
What if I wanted to buy a franchise, a McDonald's or a Wendy's or
I'd like to comment on that.
Yeah.
In the last 2 years, I've come to represent a number of people who, often downsized executives or people changing their lives and want to stop what they're doing, who have been looking at franchise businesses. And the reason they've looked at them as opposed to starting up their own business is because in return for the training and for the various forms of support and the prior experience and sometimes the name and trademark and trade dress of the franchise operation, there are all kinds of them, I'll indicate a couple of them, there's a higher chance of success. Having said that, the people who are looking to go into a franchise business have to be guided and helped understand where they belong in the particular type of business. There are one-hour dry cleaners, there's check cashing services, there are
Sure, there's lots
commercial
of
and industrial cleaning services, there is repair and restoration after fire and flood. I could go on and on. There are all kinds of franchise
painting franchises. They're franchise for everything.
Certainly far beyond the fast food and the holiday inns and the ones that are most known. And one of the issues is to do proper investigation and to qualify oneself whether you're really cut out for the particular business.
Well, one of the things I realize in terms of a franchise that makes it so attractive is all the systems are in place. The how to fry the hamburger. You go to McDonald's College. How to fry the hamburger, how long to fry the French fries, what to say to the customer, what uniforms to wear. Whereas if you're buying your own business or creating your own business, you have to create all that yourself.
There are franchise businesses which are being sold. It requires the consent and cooperation of the franchisor. And so someone who doesn't want to do a franchise business from startup may find someone else who has done it for 3, 5, 7, or 10 years, who has enough momentum that there's something to be carried on, and those transactions are special. That's acquisition of a franchise business.
An existing franchise, like existing mailboxes, etc., or McDonald's or a Wendy. What do you think about that?
I think it's a wonderful opportunity to buy existing structure. Like in a McDonald's case, they leave nothing to chance.
You were a manager of a few McDonald's.
Right?
So
yes,
you're familiar with McDonald's franchise.
Yeah, very familiar. As a young man, that was my first job. I was, in fact, the youngest store manager in the history of McDonald's. I was 17 years old and not even graduated from high school, and I got promoted. I did go to Hamburg University, and they teach you every little aspect, from how you greet the customer to how you take out the garbage. They leave nothing to chance, and they've got a proven success formula. But you have to ask...
How do they monitor that? Once the businessman buys the franchise, how does the franchisor then monitor whether or not the business owner maintains those systems in place?
They're all tied into the computers, and they're tied into management visits and accountability.
Yeah, they have what they call field representatives or consultants that come out and they monitor your progress and also help you with questions and little things that come up in the course of the business.
And what if you're not doing a good job? Do they terminate your franchise?
They really have a very selective screening process, and they make sure that you're right for them just as you're making sure that you're right for each other right from the beginning. So you have a good understanding of each other before you even enter into the franchise agreement, in McDonald's case at least.
Is that something you get involved in, buying and selling franchises, or is it more multiple franchises or larger businesses? Or
we sort of concentrate on bigger businesses. There's people that specialize just in franchises, and the areas of franchise law and negotiations are pretty complex.
Phil, do you get involved in franchise acquisitions and franchise sales? For those of our viewers, is it specialized? Is it different for you as a lawyer?
I think if you represent someone who's buying a business, whether it's a franchise business or a non-franchise business, that's a special, I'll use the term art form. The person who's thinking of buying a business ought to have an accountant skilled in the buying and selling of businesses, ought to have a lawyer skilled and accustomed to the rhythm of that enterprise, because you can't just pick it up and put it down. You got to stay with it. I think whether it's a franchise business is just a subset, just a special set of details. It's not the main event.
Why are these special skills required for the accountant and the lawyer and even the business intermediary? Why can't the average purchaser go to his regular lawyer, the lawyer who handled his will and handled his house closing? Why isn't that good for him?
I'm not sure I can give you all the whys. I can just tell you as a practical matter, if I represent a seller or a buyer and the lawyer on the other side is not knowledgeable, the transaction is less likely to succeed and be consummated. It is more likely, even if it goes to the end, to be more expensive. There is more likely to be friction. And there's an adage in this field that the longer it takes to get a deal done, the more fragile the deal is, and the more likely it's not going to go down. If you have people who are not skilled in this field, they may, with raw intelligence and with good intentions, spend an incredible waste of time and even discourage their clients from doing things that make sense because they don't bring experience.
So you think it's less expensive to use a specialist?
Absolutely.
In the long run?
Absolutely. This is not a commercial, just a fact.
No, right. I just, as a matter of educating our viewers, you think that using the person who prepares your will...
Well, let me give you a, God forbid, I'll give you a worse choice. A lawyer who is basically a litigator in his or her soul. Their entire style is combative. They also litigate for a living so that their litigation takes first priority and the business deals get put in the back burner. But when they finally surface and they can be reached, they make every issue of negotiation a win-lose situation. They've got too much riding on it. They become combative on the wrong issues. Their lack of experience in making deals happen and their combative mindset really get in the way, and the business intermediaries and the accountants and lawyers who are in this field cringe when someone like that is involved.
We're going to take just a short break. When we come back, we'll tell you how you can buy or sell a business. Phil Chapman and Jeff Motter. Thanks.
Whoa, what are you doing?
We made a deal. On Monday nights, I watch my shows.
But these are the playoffs.
Go watch them downstairs.
This isn't cable, this is satellite TV. All our sets get the same channels at the same time.
Can't you fix that?
It costs a fortune.
Sorry, deal's a deal.
There's a lot less to satellite television than you think.
I'll do laundry for a year. I'll paint the house, I'll walk the dog every day.
I love this part.
And a whole lot more to cable.
We'll have your mother over for dinner?
Parents have a hard time talking to their kids about sex is because they don't want to let go. That's their little baby.
And I know sometimes it's really hard for parents, and sometimes they're really afraid.
If they can't come to their parents to talk about it, they're going to go to another source and probably get wrong information.
I'm glad that my parents or my mother always told me like where babies came from and about sex. You know, you have to love your kids enough that you're willing to just sit down and talk about some of those tough issues.
Protect your kids from AIDS. Talk with them about sex.
You're watching It's All About Money, and we're talking about how you can make money buying or selling a business. We're talking to Phil Chapman and Jeff Mutter. Jeff, right before the break, we were talking about why you need somebody specialized. Why is it important to have a business intermediary in the process?
Well, the business of buying a business in itself is a business, and just as the business owner didn't learn how to run his business and be profitable overnight, the intermediary didn't learn his trade overnight either. It comes by years of experience putting together a lot of different deals. An intermediary has various resources that he can call upon.
What kind of resources?
Well, like he'll have a database of buyers. He'll have a Rolodex of contacts. He'll have a database that tells him what businesses are worth. He has access to the latest valuation methods. They're familiar with the ever-changing tax laws, the environmental regulations, various accounting changes. And we had a situation ourselves where we had a client that tried to sell his business by himself, and he came to us after 2 years, and he was trying to sell with his lawyer and his accountant, and unable to. And after we worked with him for a little while, we were able to put together a professional marketing plan, a program, and help him to sell his business. And his other choice was to liquidate it, and we helped him get substantially more money.
Much more profitable to sell.
Much more profitable.
Sam, I'd like to chime in. They're on the same theme. There are would-be sellers who have already themselves targeted, perhaps even had the most preliminary negotiations with a buyer or two. And yet some of those sellers have on their own have concluded they want a business intermediary to assist in the negotiations because of the same reasons that Jeff is speaking about, and for one other reason, to be insulated from the negotiations, to have room to change position.
Almost good cop, bad cop.
Something along that line, and not to telegraph sometimes some rather specific reasons. Not everyone is equipped to be a poker player. When I was in the Army, I found out that if I had a good hand, everybody knew it was written in my forehead, and they folded fast. And if I stayed in with a good hand, with a bad hand, it was too long. So I personal experience.
Is every business saleable?
No. No, some businesses are not put in position to be saleable for all kinds of reasons.
What makes them saleable?
Well,
why are some businesses saleable and some not?
Well, it's easier to pick some of the reasons why not.
Okay.
For instance, Sam, if a business had become increasingly dependent on one or two salespeople for a large percentage of the sales, and those salespeople have no bonding to the company, they have no equity, and they have no non-compete agreement. Well, at any one time, a buyer may say, what am I buying here? If the sales force leaves or the main salesperson leaves, I'm missing a large percentage of sales.
Could they rectify that by having non-compete agreements with their employees?
It's hard to get them from existing employees without giving. And it may be that a business person who sees that the business has become increasingly dependent, long before the salesperson starts to ask for an equity position or for some security, some provisions about what happens in case of death or disability, would be well advised to start to fish in those waters and see if as a trade they can get a reasonable non-compete agreement.
What might they give in trade for a reasonable non-compete?
Protections in case of death or disability. Maybe some form of limited annuity that if that person dies or is disabled, that those customers that they generated for some period of time will give rise to future commissions. Maybe not a full commission because they have to be serviced by someone else, but something for the trouble.
Well, what if somebody has a non-compete agreement and wants to leave and compete? Are they enforceable? Can you stop them from...
They're problematic in the fact that you can't tell if you're the employee who wants to go into business, a financial backer of that employee, a lender, that it's judge-made law made in a whirl of affidavits on a preliminary injunction, that will often dry up the opportunities of that employee to leave and make it too risky.
I see.
And some of
So
the
it's just the litigation process itself may thwart him from leaving.
the fear of losing will dry up the ambition and dry up the money. Those covenants can be broken. They can be defeated. You have to have the staying power. But I can't make a broad statement. Some of it depends on the judge, depends on the scope of the covenant, how the structure of the industry, whether it's really necessary. Those are some of the factors.
Jeff, what does it cost to have a business intermediary?
Well, actually,
What are the fees?
The fees, they vary depending upon the size of the transaction. They can be anywhere from 9 or 10% for a small deal up to 2% on a huge deal.
By the way, the business intermediaries that I know now call them success fees. They're contingent fees.
They're contingent on the sale.
Yeah, they're contingent upon the sale, and also it's a value-added transaction because when you use an intermediary, the price of the business that you're going to be able to get is going to be much greater than what you get on your own, and the timing is going to be much reduced.
How does the business owner know that? How does he know that the selling price is more than he could have gotten on his own? How can we establish that value added to the seller?
Well, we have a team of accountants that you well know that go in and they analyze the financials, they reconstruct them, they look at situations where the businesses will be joined together, they recast the earnings, and we're very creative in finding new ways to enhance value.
Sam, there's one area where both business intermediaries, accountants, and lawyers who are skilled in this area have been able to help. It's bridging the gap. The seller, based upon results to date, has a very firm view of what the business is worth. The buyers today say too much is subject to change. You have no fixed contracts, nothing is for sure, industry won't change, and they often are a significant measure apart. And I've seen the accountants and the business intermediaries and some lawyers deal with a two-tiered price. There's a fixed price payable under sometimes some money down and over a period of time, and then there's a contingent or earn-out price based upon actual results, usually not on profitability. You're more hinged towards a top-line item like gross sales over a period of time. If it's there, if it continues, you'll get some more. That becomes especially attractive, Jeff and I were discussing, where the seller or one or more of the management team of the seller is going to stay on for a few years.
Right, and he gets to be able to control that success fee, that earn-out. I have a client who sold an insurance company to an insurance brokerage company to an insurance company, and he got some of his price in cash and some of his price in an earn-out. Now he's still running the brokerage.
I mention this in connection with what a skilled team, not just Jeff Motter, not just you, not just me, whoever the team is. This is not the kind of approach that the person who's selling their business has ever thought of. And sometimes if the issue arises when the buyer suggests it, they shudder. They hear the cheap and easy wisdom, if it's an earn-out, you'll never see it, you'll never get it. There's a lot of negativity that floats around, sometimes around creative ideas.
Right, and some of that mindset is real and some isn't. How long does the process take from the time somebody makes a decision to sell a business, assuming, Phil, as you said, the business is saleable? How long does it take to close a deal, to get cash?
There's some subsidiary questions about that. How much, in what good shape is the business when the business person decides they want to sell? How many things have been attended to or not attended to?
What does good shape mean?
Well, it could mean all kinds of things. Have they really looked to see whether they've been liable for sales taxes in various and jurisdictions? Is the real estate accidentally in the operating company as opposed to some separate entity? Have they had good attendance to human resources problems, or do they have a whole bunch of problems that are staring them from their employment practices?
Like what? What kind of problems could they have?
Well, the smaller businesses don't have in-house HR people, right. And in terms of how they hire, how they fire, how they deal with temporary disability, pregnancy leave, whether they investigate claims of sexual harassment, basically whether they're savvy enough to know about the new areas of exposure.
And that could get them in trouble on a sale?
Someone could find, looking at their personnel files and nosing around, that they smell contingent liability. Or even if they haven't bought...
If Harry, the factory foreman, is constantly harassing people, then that could thwart a deal?
Even if the buyer isn't buying stock, they may be buying a workforce in place, and the employment practices history becomes relevant to the day that you own the business and have to deal with people. They can have intellectual property issues that they have not protected, trade names, trademarks, confidential information, failure to have non-competes. I created a survey in connection with a seminar by a prominent New Jersey publication, sort of a checklist for long-range items. Are you ready for the money? Are you ready for financing? Are you ready to be bought? You start now to run your business properly and address those issues, knowing that you do not want to create a situation. I'm going to give you one more that affects timetable, so you won't think I didn't answer your question. You said, how long is it going to take? Well, supposing the business person, whether they own or lease, has never investigated the environmental aspects of the place where they operate. It may be that after they do a phase 1 site assessment, they have to do a phase 2, and now they find out there's some remediation. Well, the buyer may not wait for
That's going to take a while.
For remediation and a sign-off by the New Jersey Department of Environmental Protection. The window of interest or opportunity may be too short. And also, I will tell you, the negotiations at the time of contract are brutal.
Do emotions play a role?
Always, emotions always play a role.
People get excited about the buyer and the seller?
Yeah, they both get excited, and the buyer has remorse at some point, the seller has remorse.
I've heard of seller's remorse, buyer's remorse. What does that mean?
Well, whenever you make a deal as a seller, you always think you sold it for too little money, and whenever you agree to buy something, you think you're paying too much. And so you naturally have this little bit of remorse. Oh, I should have asked for some more, I should have given less.
There's another form of remorse. That's because the term, Sam, has lots of applications. I've heard it. What happens when the deal craters because suddenly the seller, who seemed to want to sell, doesn't want to sell?
Changes his mind.
Maybe it was not a decision that, as someone put it, is mutually agreeable to his or her spouse.
Right.
Maybe they looked at their changes.
Spouses do play an important role.
Maybe they're afraid of cabin fever, locked in the condo in Florida.
What am I going to do now? If I sell my business, that's all I've been doing for the last 20 years.
Well,
what am I
lately
gonna do?
people are selling younger and going on to other careers or creating new businesses.
Well, there's a whole generation of people that are entrepreneurial in spirit, where they can start their own business, but once they've established it, it's not fun for them to run it. And they're great candidates to be sold.
One more form of remorse.
We're out of time. It's been a very interesting program on mergers and acquisitions. I learned a lot. This is Sam Rosenfarb for It's All About Money. If you want to get Phil Chapman's survey on rating your business, write to me, Sam Rosenfarb, Rosenfarb Winters and Company, 101 Eisenhower Parkway, Roseland, New Jersey, 07068, or call me, 973-618-0800. Thanks for watching. Great show. Thanks.
It's All About Money. With your host, CPA and forensic accountant, Sam Rosenfarb.
You're watching It's All About Money. Nobody knows more about money than accountants. Hi, I'm Keith Bala. I've been an accountant for over 20 years, and I can tell you from firsthand experience that everybody, in some way, on a daily basis, is motivated by money. As an accountant, I have seen hundreds of professional firms merge. Some succeed while others fail. Success and failure is determined by many factors, but the most important factor is money. This show is all about educating you, teaching you about how money plays an important role in all of our lives. In this episode of It's All About Money, you'll learn about two of New Jersey's largest forensic accounting firms becoming one, and the reasons for their merger. With me today are my partners, Sam Rosenfarb, formerly managing partner of Rosenfarb and Company of Roseland, New Jersey, and current managing partner of Rosenfarb, Winters and Company, and Alan Winters, former managing partner of Winters, Ibex, and Maggio of Eatontown, and currently partner in charge of the firm's matrimonial department. With this merger, Rosenfarb, Winters and Company is now one of New Jersey's premier forensic accounting firms and largest matrimonial accounting firm. Sam's broad experience translates into a keen ability to assess all different types of financial situations in the blink of an eye. He is a keynote speaker and frequent television guest. Sam has overseen hundreds of governmental fraud investigations, white-collar crime investigations, divorce litigations, and investigative audit engagements. Alan Winters is an expert in investigative, forensic, and litigation support accounting, which includes matters dealing with divorce, business valuation, contractual disputes, and conservatorship, as well as damage calculations, including personal injury. Mr. Winters frequently speaks and lectures at seminars given to lawyers, accountants, judges, and mediators. Welcome, Sam and Alan. So, Alan,
Thanks, Keith.
how did you come to be a divorce litigation expert?
Well, I was involved in a major business in New York City, which was sold, and I left New York City, came back down to New Jersey where I previously lived, and really had nothing to do, and I was looking for something to do, and because I had lived in this area previously and practiced accounting there, I knew quite a few lawyers, judges, etc. So I was speaking to a judge one night at a party, and I said, you know, I think it's a great idea that the accountants get involved in divorce litigation, because you need to do valuations, you have to have tracing of assets, income, etc. And this judge, who was a matrimonial judge at the time, said, great idea, I think you ought to do that. And that's what I did. Unbeknownst to me, of course, there were other people doing it. I thought I was an innovator, but there were other people doing it at the time.
You thought you created the whole the industry.
Right. Well, it was very small at the time, and we've come a long way since then, because now I would say almost every matrimonial attorney uses financial experts, when at that time they did not.
Well, you are known in the professional community as an innovator in the matrimonial accounting field. We've known each other a lot of years.
Right.
And you're one of the few accountants who exclusively practice in the litigation support area. You even had on your stationery and on your marketing material that your practice was limited,
right.
Unlike our firm, where I stumbled onto litigation. Right?
Sam, what are the advantages of Winters and Rosenfarb, the merger coming together?
Well, Rosenfarb and Company was a full-service accounting firm. We did, we prepared tax returns, we represented individuals, we represented businesses, we did auditing, reviews, compilations, financial statements, and we did a lot of litigation. Most of our litigation was centered on white-collar crime, some fraud investigations. We did some commercial investigations, and a little bit of matrimonial work. We had one partner of the 5 partners who was exclusively handling divorce. Winters, Ibex, and Maggio was predominantly matrimonial oriented, predominantly divorce oriented, and I saw that by merging we could provide a greater array of specialty, greater array of talent. After all, this business is just about people. We don't have machines that do the work, we just have people. And by merging, we had more people who had more talent, more competence in the divorce arena, and at the same time we had more people who could provide talent in the fraud arena, the investigation arena, in the white-collar crime area, in the commercial litigation area, to those clients of Winters, Ibex, and Maggio. So basically the answer is I saw more money. It made sense to merge because we were going to make more money by providing more services to more people.
And how does that benefit those clients?
Well, the clients who we represent, and our clients are varied, and they're referred to us by the lawyers whose litigation is being handled by them. We're able to provide greater expertise, greater efficiency, greater talent. We now have somebody in the firm who's an expert at valuing just professional practices, just chiropractors, doctors, dentists, just professional practices. We have another person in the firm whose business is just valuation. They're not even an accountant. They're just a valuation expert. We have another person in the firm who just handles personal injury valuation. So we can provide our clients with greater expertise, more efficient productivity, with greater competence.
This is the time of the specialists, and as doctors specialize, and
right. As a divorce specialist, you often hear that the husband gets all of the money in a divorce, and the wife gets the short end of the stick. Tell us what really happens.
Not if you ask the husband that. I think the husband will tell you the other way around.
What really happens?
Well, what really happens is that you try to determine the amount of value of assets and try to distribute them equitably. Equitably does not necessarily mean equal, but you try to distribute them equitably. You try to determine the amount of earnings that the both parties have. There may be two earning family, and even if it's one, you talked about the husband thinking that he's coming out with the short end of the stick. If he's the only earner and he was providing the income for the family previously, he still has to continue to provide income for the family.
And where do they hide money typically? When they don't want you to find what they really are worth?
Well, either in your mattress or in a box in the backyard, either one. In fact, I'll tell you, that's the hardest thing to find is somebody is burying in the backyard, but usually people don't do that. They spend what they take.
It's hard to keep it in the backyard or in a mattress because it's not earning interest. And at today's investment rates, some people are earning 15, 20% a year. And so at 15, 20% a year, if you keep it in the mattress, it doesn't make any sense because you're losing all that money.
So when you hear about the wife, typically the wife complaining, my husband has all this money, but I don't see it, I don't know where it's going to.
Well, the first thing in every divorce case that the wife will say is, he's got money in Switzerland. I mean, we hear this in every case. There's money in Switzerland, the Cayman Islands, Bahamas, and if I've ever found, I haven't found one yet in Switzerland, so I don't think that that's the case.
Well, then, Sam, how does your involvement enhance and get justice in these situations?
Well, we see our role. Our role in these cases is as a settlement facilitator. That's how ultimately all of us see our role in the litigation process, is to facilitate a settlement. So if we're representing the husband, and the husband happens to own the business, which is less and less, more and more frequently, the wife owns the business, or the wife and husband each own a business. But if we're representing the business owner, and our role is to value the business for him, if we value it very low because he's our client, that's not going to facilitate a settlement. We have to be fair. So I see our value in being able, one, to know what's fair, to know what's right, as compared to those accountants or those experts who've only dabbled in this field, who don't know the difference between...
So then you don't take a side then?
Well, let me comment on that. I think
that's an excellent question. Do we take a side?
I think that we've built our reputation over the number of years that we've been doing this as some firm that is very honest and forthright. And the more you build your reputation like that, the more business that you get and the more lawyers that come to you. And if it is a divorce, and don't forget we do other things other than divorce, but if we do a divorce and we're jointly agreed upon, it's only because both lawyers know of our reputation and both lawyers know we'll do this fairly.
Right, but if you're not jointly agreed on, doesn't the attorney want you to have the highest possible value?
You know,
well, it depends on the attorney. Some attorneys do, some attorneys don't. But irrespective of what the attorney wants, we have to do our job. We're not employees of the attorney. We're not our opinions are not directed by him. We come to our own conclusion. And if we see our role, and I do very seriously, see our role as a settlement facilitator and not an obstacle to a settlement, then we'll do our job fairly and responsibly. Now, that doesn't mean that we overlook things that are going to help our client because it hurts the person who our client's adverse to.
So how do you do that? How do you find the dirt and the true story and the true numbers when somebody is looking to hide things from their spouse?
Let me just back up 1 minute and comment on something that you asked Sam, and I just want to make one comment on it, and that is, I don't think in all the years I've been doing this, I've ever had an attorney say to me, I want you to make this come out in such and such a manner. It doesn't happen that way. Attorneys give you a job, they expect a fair job to be performed.
Well, I've had attorneys tell me that they want as high a number as possible.
I have not had that.
They want me to stretch it so it can be as high as possible. I have had attorneys say that. Working for the wife, they say, I want this number high or I want this number low. And they'll even, I've had attorneys try to dictate how I value the business and what capitalization rate to use and what methodology to use. And those attorneys, if I can't persuade them, become ex-clients because I resign. You know, we have an obligation to our firm, to our profession, to the system, and to ultimately to a long-term relationship with many, many more clients where we have to be fair.
Well, what sets you apart from other accountants in this area?
Well,
why would somebody want to use you versus another accountant?
Yeah,
I think that, as I previously said, you build your reputation on fairness and knowledge and doing a good job. you know, we all have passed an examination that was given by the American Institute of CPAs, which is one of the few designations other than CPA, which is ABV, accredited in business valuation. And every member of our firm that's involved in divorce or business value has that designation. So that kind of sets us apart from other firms. There are other people
We have more of
that have
those
it.
designations than any firm in the state. We have 4 people of our firm. Half of the partners in our firm have that designation.
Do you ever get involved in any, like...
Excuse me, 5.
5?
Right, 5.
We have 5 people of ABV?
Right.
I thought it was only 4 of us.
5.
I apologize.
I know a large percentage of students that go to school for accounting now it's a high population of women. Is your firm typically diverse, where you have a high percentage of women, men, women?
It's very interesting. I think 55% of the graduates, accounting graduates, are women, but only 2% of the accounting firm partners are women. At our firm, of our 8 partners, we do have 8 partners, right?
Yes.
Okay. Of our 8 partners, we have 1 woman, which is a percentage of 12.5%, if my math is right, which is a huge percentage, but it is 1 woman partner.
And overall professional associates, professional
About
staff?
half, I think. About half the staff are women.
Yes, a lot of
And
them.
how
I
does
want to get back to your question before, is that what differentiates us? We're all unique. I'm unique, you're unique as the firm, Alan's unique, all of the partners are unique, but we bring with us a sense of business acumen at the firm, which is, I think, second to none. We have business experience outside of accounting, and we have creativity to carve out a settlement, creativity to articulate our positions.
So when you're involved in a settlement, it's not crystal clear, straight down the line, and this is the right number. There's latitude.
One of the huge advantages of settling, as opposed to having a judge impose a decision, is, one, you're in control of the settlement process yourself. So you can settle and be very creative. You could have terms of settlement. You can have settlement based on, in the sale of a business, we call it an earnout, based on how profitable a business is in the future. You could have a settlement based on pure emotions. So if you settle, you can be very, very creative. You don't have to be bound by just dollars and cents.
I'm not quite sure of this, but I believe that statistics proves out that settled cases last longer than adjudicated cases, because each person has a party to the settlement. They participate in the settlement. They agree to certain items in the settlement.
That's one of the huge advantages to mediation, as opposed to having adjudication, where the 2 parties can meet with an impartial mediator who attempts to extract a settlement from either side. He doesn't impose a settlement. He merely acts as a facilitator to settle. Alan, you're an accredited mediator.
Yes.
And you perform many mediations in divorce.
Yes,
right?
I'm an accredited professional mediator of the New Jersey Association of Professional Mediators.
And attorneys have referred clients to you to mediators.
Yes.
Attorneys where they have a client whose case they can't settle, and the costs are becoming prohibitive.
Do you get involved in mediation also with criminal cases?
No, I have not done that. No, I do divorce and commercial
It's hard to
mediation.
mediate between the government and a criminal.
No, I would say it's 2 partners in a business and one stealing from the other.
Well, I've been involved in mediation in commercial cases other than divorce. Right. But it's not a criminal case. It's not. There's no threat of jail to any of the parties.
You know, we constantly talk about divorce only because I am the partner in charge of divorce, but the firm of Rosenfarb Winters and Company does much more other types of litigation work. For example, we do press shareholder suits. And today, you're finding a lot of oppressed shareholder suits where you said, I know you said something about criminal, but where 2 partners don't agree in a business.
That's a business divorce.
It's a business divorce, right. And there's a lot of that. And we have had quite a few oppressed shareholder suits.
And the business divorces are more emotional, I find, than even the matrimonial divorces. These are partners who have a financial arrangement, and they're splitting up, and the emotions are violent.
Yeah. We're meeting with Alan Winters and Sam Rosenfarb, and we're just going to take a short break, and we'll be right back.
There are some people who think those suffering from mental illness should be locked up and kept from society. Obviously, there's a flaw in that thinking. People with mental illness have helped society move forward. Don't hold them back. A message from the New Jersey Association of Mental Health Agencies.
Come on.
No, Scott. I don't think we should.
Come on. It'll feel good.
You promise?
Come on. We're old enough.
Well, okay. Wait, I hear your mom.
Don't worry. She never comes down here.
Hi, this is Keith Ballard, and we're back with It's All About Money with our guests Alan Winters and Sam Rosenfarb. So we talked a lot about divorce. Sam, what other cases do you get involved in other than divorce?
Well, our firm has a myriad of litigation cases, from bank fraud to tax fraud to partners stealing from each other to calculating damages, contractual disputes. We also do work other than litigation. We're involved in estate planning, income tax planning, cost reduction programs, profit enhancement. We do business consulting. We're able to consult with businesses and show them how to make more money, generate more sales.
What's the biggest or most exciting case you've ever been involved in?
Well, the most interesting, which may not be the biggest, the most interesting case I've ever been involved in is we were retained by an insurance company who had provided a $40 million life insurance policy on a business executive. $40 million is a lot of money. This $40 million policy replaced a $25 million policy, which was outstanding for 2 years. This business executive had the majority shares of a small publicly traded company. It was a family company. And 2 months after signing on for this $40 million policy, they found them splattered on the sidewalk in front of his lawyer's office building, Manhattan. And the 40th story floor where his lawyer's office was located, the window to the men's room was found open. There was a garbage can right in front of the window, which looked like somebody climbed on top of the window. Somebody climbed on top of the garbage can, looked out the window, and then jumped, and they found him splattered. So naturally, after an appropriate mourning period of about 30 seconds, his wife went to the insurance company and said, I want my $40 million. And the insurance company said, well, it looks like suicide to us. You know, it looks like he went into the bathroom. He was visiting with his lawyer. He went into the bathroom. He took the garbage can, put it in front of the window, got on top of it, opened the window, jumped out, and splattered. I said, looks like suicide. She says, no, it wasn't suicide. Maybe he was pushed. Maybe he tripped. Maybe he fell. Maybe he opened the window just to get some fresh air. And the policy had a suicide exclusion. If there was a suicide within 2 years of the policy, nothing was paid. So if this were suicide, the insurance company would have saved $40 million. Whereas if it was accidental or he was pushed or murdered, the wife would get $40 million. So the insurance company hired 3 experts. They hired a psychologist to review his affairs, his prior affairs, to determine was he mentally motivated to commit suicide. They hired our firm, they hired me, to determine did he have a financial motive for suicide other than the $40 million? Did he have business problems? Was he straddled with a lot of debt? And they hired a physicist, which I found fascinating, a physics professor from Rutgers, who determined that the angle of descent from this window, right, the way he landed smack dab on the sidewalk, could only have been caused by a jump. It couldn't have been caused by somebody pushing him, and it couldn't be caused by somebody slipping. It could only be caused by a jump. So the 3 of us, the 3 experts, the psychologist, the physicist, and myself, prepared our reports and convinced the insurance company, of course, that it was suicide. And I believed it was suicide, and eventually, as you said, so many cases settled. This case settled as well. But that was my most interesting case.
All right. How about you, Alan?
I don't have a $40 million story to tell you.
What was your most interesting case?
But you know, everything is relative. So my interesting case was a...
By the way, we didn't get the $40 million. It would have been a lot more interesting then.
Or a piece of it.
Or a piece, right. We all of our fees, and we should say all of our fees are based on the hours we spend. We don't have an interest in the outcome. Whether the client wins or loses, we always get paid.
So if they win a lot of money, you don't get a piece of that.
No,
that's correct.
We do not work on contingent
right,
fees.
we don't work on a commission. Right. Although sometimes we'd like to. I'm sorry.
That's all right. I had a small business, a repair business, appliance repairs, where when you walked into the business, there were big signs that said, we do not accept checks. We only accept cash or money orders. So I started to do my forensic investigation, and I asked the owner of the business to walk me around the business, explain it to me, how they received their revenue, et cetera, and they had some warranty work they did, and whatever. And then after about an hour of walking around the business, I kind of caught him off guard when I said, let me see one of your day's sales, any day, or any month. So he opened a drawer, he pulled out 1 month's sale. I said, okay, I'd like to do some work. And I took a look at these month's tickets, and on some tickets it had a code, it said PDCH. Well, you don't have to be a rocket scientist to figure out that meant paid in cash. And then I took all the bank statements.
Could be paid by check. PDCH.
It was paid by cash. So I took all the bank statements, and I wanted to see how much the cash was deposited. And I looked at 3 years' bank statements. What do you think the answer was? He was a pig, because there was zero deposit. Never once did he deposit cash in this business.
Wow.
And it
Always checks.
Always money orders or checks that he deposited in the business. So obviously he was taking the cash. And he had such good records that on every single deposit ticket was the name of the customer. So I was able to take the tickets that said PDCH and trace them back to the deposit tickets to see that they weren't there. But that's not the end of the story. That's only the beginning. Because I then asked him, I said, well, you gave me 1 month. You gave me the month of November 1991. I would like to see all of the tickets for 3 years. By this time, he knew what I was doing. So he said, I don't have them, I don't know. And,
miraculous disappearance.
Right.
So do you report that then to the judge in the case?
Well, wait. This is, as I said, only the beginning of the story. So he called me back about 2 months later. He said, I have all your tickets for you. And when he called me back, I looked at the tickets, and I see that they're different color paper, that there was red and blue lines on the ticket, that the shading of the blue and red didn't line up. And the biggest thing was his tickets were numbered, and he had the number sign NO with a little line under it on the old tickets. When he had them reprinted, they forgot to put that on there. So I knew that all these tickets were reprinted. He had gone to a printer and reprinted another series of tickets, took the time to pull out all the cash tickets and insert them with these new tickets. Well, of course, we knew what he was doing. And we did an extrapolation of that 1 month and determined how much cash he was taking out of the business. And it was substantial.
A substantial amount.
Substantial.
Yeah.
What did he do with the cash?
He spent it. He lived on it. You could determine some of his lifestyle where...
he was spending more than he was reporting.
By a long shot. Yeah, it wasn't even close.
Right.
Recently in the news, there was a story about a money manager who stole about $3 billion from his clients. What typically would you do to uncover that, or tell the company to implement to stop that kind of abuse?
Well, internal controls are what in the accounting profession, we have this term called accounting controls, financial controls. And what that is basically a checks and balances on the handling of assets, the company's money. So if this company had internal controls, he wouldn't have been able to divert all this money. If there were controls, for instance, he was supposed to be buying investments. Instead, he was siphoning off all this money to Switzerland, to Swiss bank accounts for himself. If there were controls in place or audits in place, there are auditors who monitor to determine that the controls are implemented and they're being used and they haven't been thwarted.
But they're not there to detect fraud.
Auditors generally are not there to detect fraud, although our firm as fraud auditors do detect fraud. We're frequently engaged to find fraud, to uncover fraud, to prevent fraud from reoccurring, although we can't guarantee that fraud ever...
And have you had high-profile cases like that?
You know, many small business people deliberately have poor internal controls and sloppy records because they themselves are stealing the money, and they don't want anybody to know it, so they deliberately do that. But the downside of that is that it permits their employees also to steal.
Right.
And that's the one thing they don't understand.
So that's what this money manager in Connecticut, he was stealing. He had a lack of controls because he wanted to keep stealing. We've had a lot of high-profile cases, government cases, school board cases, municipal cases, a lot of cases that have been on the front page of the newspaper.
And ultimately, do these people go to jail?
If you find them.
It depends. It depends. If we're representing a company who's been the victim of an embezzlement, typically we don't want the employee to go to jail. We want to get, when I say we, I mean the company who's retained us.
All right. Well, we're out of time, and this is Keith Balla for It's All About Money, and we thank Alan Winters and Sam Rosenfarb for being our guests on today's show. Thank you.
Thanks very much.
Thank you.
Thank you, Alan.
Thanks, Keith.
It's All About Money. With your host, CPA and forensic accountant, Sam Rosenfarb.
You're watching It's All About Money. Nobody knows more about money than accountants. Hi, I'm Sam Rosenfarb. I'm a forensic accountant. I've been an accountant for over 30 years. I can tell you from firsthand experience that everybody in some way on a daily basis is motivated by money. As a forensic accountant, I've been involved in hundreds of divorce cases, from simple to the extremely complex. Every divorce involves some money. If you're going through a divorce or know someone that is, stay tuned to this episode of It's All About Money. This show is all about educating you, teaching you about how money plays an important role in all of our lives. Divorce is unpredictable. The more you know about divorce, the greater your ability to control your future in a divorce, and the less stress you'll cause to yourself as your divorce becomes finalized. This episode of It's All About Money questions, is divorce really all about money? To answer this question, today we have two of New Jersey's foremost experts in the field of divorce. Sharon Maggio is my partner at Rosenfarb Winters & Company, the largest matrimonial accounting firm in the state. Sharon specializes in matrimonial accounting. She's an accredited business appraiser and a personal financial planning specialist. She has extensive experience in tax and financial planning, which she incorporates into her matrimonial practice. Sharon is well known for her ability to meet with both the husband and the wife in one room and work out financial arrangements to satisfy both parties. She's a published writer on issues of divorce, economic loss assessment, tax, and financial planning. Also with me is Judge Michael Diamond, appointed to the Superior Court of New Jersey in 1995 after 29 years of extensive private practice. Judge Diamond is currently a family judge in Passaic County. He's a past president of the Passaic County Bar Association and a founding member of the Family Law Inns of Court. Judge Diamond is a frequent lecturer for the Institute of Continuing Legal Education and the American Academy of Matrimonial Lawyers. Judge Diamond, it's a pleasure to have you on the show.
Thank you, Sam.
What kind of matters come before you on the bench?
Well, in addition to divorce trials, we get a lot of domestic violence matters. I also do sometimes juvenile and what we call non-dissolution matters, which are money matters, custody, that type of thing of people that are not married.
So people who aren't married, you mean they're rooming together? They're
live together, have children together, have a relationship but are not married, and they come in for relief either for custody or for paternity or for support, something like that, visitation.
Is there common law marriage in the state?
Not in New Jersey, no.
Not in New Jersey. So no matter how many years you're married, you're either no matter how many years you're living together,
yeah.
You're still single.
Single unless you get married.
So if you're living together unmarried, do either spouse gain any rights?
They're not spouses, remember that.
Do either parties, right? Do either parties gain any rights?
Yes, they do gain rights. But they have the situation of custody if there's children involved. There's a support situation, medical bills. There's a lot. They have similar rights as if they're married, except they don't get the equitable distribution.
What about alimony or child alimony? Do they get alimony?
They can get support monies under certain circumstances.
That's interesting. There was famous cases about unmarried individuals living together.
We're talking about palimony now. That's a little bit
right,
different.
that's the word.
Palimony is a different situation, and that's by case law. There's not statutory right to it.
Well, how is that different for our viewers?
Well, in a palimony situation, it started with the Lee Marvin case in California.
Right. That's the case I was thinking of, Lee Marvin.
Yeah, I had one of the first palimony cases in the
In New
state
Jersey?
as an attorney, yeah. Where parties may live together under promise of marriage by the male to the female, and if they can hold themselves out and she can prove that, she may be able to get a lump sum award by way of palimony, but not necessarily alimony or along those lines.
If somebody has promised to marry them.
Well, you have to show not only promise, but you have to show some proof of it. You have to show more than just I'm going to do that.
Right.
And it's got to be a time period involved and so forth. But it's by case law.
That's interesting. Sharon, how did you get involved in doing divorce work?
Well, I started out as a regular general accountant, and the firm I was working with, they just started doing some litigation support accounting, and they happened one of the partners.
What does that mean for our viewers? Litigation
support accounting are accountants that help attorneys and the courts, and sometimes just the litigants, the people involved in the litigation, solve their financial problems. They do reports, they do analysis, they do assessment, and they try and figure out what's really going on with the money. And one of the partners in the firm I was with had just started doing some litigation work, and he happened to have a big divorce case. And he said, you know, I could use some help on this. And that was the beginning.
What is a big divorce case? Heavy litigants? Fat litigants?
A big divorce case, in my assessment, means there's a lot of money or assets to be either discovered or valued or found, or statements to be made in the determination of how the assets can be distributed. There may be some estate planning. The marital estate, the assets may be so great. There's terrific opportunities to do certain types of estate planning that doesn't happen during normal marriages. So those are big divorces. That's what I consider big divorces.
So you got involved in this big divorce, and what?
I got involved in this big divorce. I loved it. They hated each other. The husband and wife hated each other. And we actually were working in that case just for the husband, as opposed to many of my cases where I work for both sides and I'm mutually agreed upon as a joint accountant. In this case, it was just the husband. The parties hated each other, but he had a very large business, and we had to place a value on the business and determine how much money he was really making from his business. Of course, the spouse who was not in the business was claiming all kinds of cash income that he had and that he was hiding, and there were many issues that we had to resolve.
Is that frequently the case, Judge, that a lot of spouses claim there's income that's not being reported?
Yes, many times.
That is. And do you rely on accountants to help you?
I look for the accounts to find out whether it's true or not, and accounts in their own kind of way will not necessarily call it cash, but they have their other technical terms.
We have to be very careful when we put information in front of a judge.
Why is that?
Because the judge has a certain fiduciary duty to report items of tax avoidance to the Internal Revenue Service.
Unreported income.
Yeah.
If there is unreported income, you have an obligation to...
If I make a decision, the ultimate decision, that there's unreported income, I have an obligation to report that case to the authorities, IRS, to the State Attorney General, and to the prosecutor.
Right. What is the Sheridan case?
That's basically what it says. If there's unreported income, it's one of the things Sheridan says. If there's unreported income and the court makes the ultimate decision, this is the way I interpret it, as to whether at the end of the case, and I find that there was unreported income, I have an obligation to report the parties.
And so what does that do? What advice can you give, Sharon, what advice can you give people who have unreported income?
When they
get divorced, because a lot of people know that they have unreported income.
Absolutely.
Both spouses, certainly at least one knows.
Right. And probably the best advice I could give anyone that, in any case I'm involved in, if there is unreported income, is to let me do my job, let me figure out what the numbers are, and then sit down and have a conference and try and settle the case outside of the courtroom and not put it in front of the judge.
Most times it'll settle because they don't want to take a chance. Even if the husband's not reporting it, if the son did joint return or the wife knows about it, they're both going to have a problem.
Is unreported income the same as being very aggressive and deducting expenses?
I was just going to add that. Unreported income, also, if you take non-business deductions on a business,
so you deduct your child's wedding on your business. So, you're very aggressive.
That's not really what they're looking for. They're looking for somebody who's in a cash business doesn't report it all.
That's the unreported income.
Well, that's primarily.
But on an audit, the Internal Revenue Service would also deem inappropriate deductions as...
It could be a crime.
Absolutely.
Right, if you intentionally,
yes.
If you intentionally deduct a personal expense, it could be a crime.
Exactly.
So according to the IRS, it's either unreported monies that you didn't report as income or inappropriate deductions. Either way.
Can the parties agree? Couldn't they use an arbitrator instead of going before a judge? Can they agree to use an independent arbitrator so that they're not bound by?
You're talking about for what purpose?
If both parties know that there's been unreported income, that they haven't reported income on their tax returns, and they're fearful of testifying about unreported income before a judge.
So they go to a mediation and see if the mediator can resolve it, and then they come to the court with a written agreement and go from there.
That works as well.
Well, there's a big move now for mediation because of the high volume of cases, absolutely.
Because, and how does mediation work? Mediation is a voluntary.
It's a voluntary program, although courts are now pushing towards this alternate dispute resolution because of the high volume, where a mediator comes in, is paid by the parties, and will try to negotiate a settlement. If it can be done, it's reduced to writing, and then it's placed on the record in the courtroom. It's not as simple as that, but that's what it is.
Fairly successful?
It's new yet.
It's fairly new.
Didn't the Supreme Court just pass a ruling to make mediation mandatory? Or is that still
it's in
pending?
6 counties now, 3 post and 3 pre-judgment, as a test case to see if it works.
I think it's terrific. There's still, even in mediation, there's still an avenue for forensic accounting because there are still those issues that have to be resolved before the
So we're not out of business even in mediation.
Yeah, and actually it's much better for the litigant.
You might get more business.
Right. Why? Why? Yeah,
because there's more mediation.
There'll be more
mediation to help the mediator.
Why are there so many more cases?
Why?
Yeah, you said there's a backlog of cases. That's why you're using mediation. Why are there more people getting divorced? Is that
what's the divorce rate better than 1 out of 3 or 2 out of 3 or something like that? Just that's the unfortunate fact of life.
Does it keep expanding? Is the divorce
more and more year? Every year it gets heavier. And the volume is just unbelievable. Some counties are way back. We in Passaic County 2-3 years ago would take about 4 years to get yourself divorced from the time you file a complaint. We put a push on, and now you're about
4 years from the time you file. Some of the marriages aren't 4 years old.
That's true. Now we're about 18 months.
Takes you longer to get divorced than to get married.
There are a lot of counties that are 3. The counties now are 3 years waiting to just get divorced.
What's causing all the delays, other than the number of cases?
Well, something along the lines of what Sharon said before about the parties that don't like each other. That happens too often. And I say that in my court every day. I don't care if you hate each other. It doesn't bother me. But we're not going to stand in the way of A, resolving the matter, or B, your children. And the dislike is part of the problem. And what happens is they carry that on up to the day of trial and then finally realize what's happening.
I mean, I can get involved in a case where I have been retained by a non-business ownered spouse. And the business ownered spouse, they don't want me around. So they delay.
He doesn't want you around in order to, he doesn't want you to value his business.
They don't want me to value.
He doesn't want you to tell
look
his
at the
wife
books
what his
and
really
records or what his real income is. And they delay and they delay. And sometimes it takes me 6 months just to get tax returns. And so those kind of delays hurt the court system.
Well, those are discovery problems. There's a move on now to try and reduce that by different rules of court, which you're trying to do with case management and other ways of forcing discovery to take place a lot earlier in the case, and hopefully reduce the backlog.
How could you force a recalcitrant husband from providing the records to...
Sanctions.
Just sanctions. Fees?
Fees.
Fees.
Penalties.
Could you put him in jail?
Suppresses pleadings.
Can you put a husband in jail
Not for that, you're not going to.
Could you put him in jail for other things?
Yes.
What kind of things can a husband go to jail for? Or a wife?
Well, total disregard of court rules, complete violations.
If you don't pay child support?
If you don't pay, for example, I can put you on a 2-week warrant status. If you don't pay your support for 2 straight weeks, I can have you arrested and brought before me. And if you pay up, you're going to sit in jail till you pay up. There's a lot of ways it can be done.
And when you're in jail, how do they pay up? If they don't have any money when they're out of jail?
Suddenly the money arises.
It's amazing how the money arises.
It's always that way. If you're in front of me on a non-dissolution matter, for example, and you're brought before the court because you haven't paid a lot of money in arrears, and I say, okay, fine, I'll remand you to the Passaic County Jail unless you put up at $5,000. But I don't have any money, Judge. $5,000, you put it up, you go home. Turn around as they're walking out, where I write the check. So, I mean, it happens, but...
So it's amazing how when they go to jail, they suddenly have some money.
Absolutely.
But not for child support. So jail is a very potent punishment for for these recalcitrant spouses.
We call it RAIDS, recently acquired income deficiency syndrome.
Recently acquired income deficiency. Right. I like that, for people who have to pay support or get divorced. Right. Do a lot of spouses hide assets and hide income?
Yes.
They do?
A lot.
Do they hide it from each other, or they hide it just from the government?
Both. Both, but it's interesting because one of my best sources of information is usually the spouse who's not involved in the business. They know more than one would think they would know. They usually, they usually give me tip-offs. I had a doctor once. First of all, when you get a doctor whose tax return shows he's only making $10,000 a year, your antennas have to go up, right? There's something wrong there. So when I went to his practice and I looked at his income sheets, the only money he ever reported on his tax return was the checks that the patients would actually write while they're there in the office. All the insurance money, I never saw the checks. So I asked, I said, what do you mean
he never deposited the checks that he got from the insurance company?
Well, I didn't know what he was doing with them. So I happened to ask his wife, who had nothing to do with this practice, and she said, oh, he keeps a book called an ROA, Received on Account. She said, I think that's where he tracks those insurance cash. So sure enough, she got me an old book.
An old ROA?
An old ROA book. And sure enough, he was not reporting close to $150,000 a year.
What was he doing with it?
He was putting it in bank accounts in his kids' names. He was just cashing the checks because they come in payable to the doctor. They don't come payable to any, he was cashing the checks. He had cash around. He just had it all over the place, different banks all over the place. But once I knew about the ROA, which the wife told me about, it became very easy in that case to find the money. It was
Why
simple.
is this litigation so complicated? Why isn't it just, well, tell me what complicates it, other than they hate each other. Is it?
That's the primary reason. Sometimes you get attorneys who don't like each other.
The attorneys don't like each other either.
And that creates a problem. Egos come involved. Sometimes attorneys forget they represent clients and they start taking on the position of the client instead of being the objective party representing him. And that becomes a problem.
Are there moves afoot to educate attorneys on how?
Absolutely. Professionalism. There's a tremendous move on what we call professionalism in the attorneys to each other as well as to the courts.
We need to take a short break, and we'll be right back with It's All About Money, talking with Judge Diamond and Sharon Maggio on Is Divorce All About Money?
There's this thing going around called sniffing. You think you're getting high, but the dizzy, fuzzy feeling is just what happens when your brain doesn't get oxygen. The chemicals get in the way. So it's like you're not breathing. That's how sniffing causes brain damage and death. So when you think you're sniffing, your brain thinks you're drowning. And your brain is pretty much right.
Listen to your kids. You need to be really open-minded, not to preach and not to judge.
Be a friend to your child too, let your child know that they can come talk to you.
You got to be able to listen to each other. That's the basis of everything.
Listening is mainly with your ears and not talking at all.
Without listening, there can't be any understanding.
I don't know if a lot of people understand that, but you just sit there and you listen.
Protect your kids from AIDS. Listen to them.
Hi, this is Sam Rosenfarb. You're watching It's All About Money. We're talking about Is Divorce All About Money with Judge Michael Diamond and Sharon Maggio. Right before the break, we were talking about how spouses who owe money all of a sudden come up with cash that they couldn't come up with when they're threatened with jail. Any other interesting behavior patterns that you find with some of the people who come before you, Judge Diamond? Do people people all of a sudden have better memories when you show them certain evidence? Do they?
I'll tell you two things. We have what we call a case information statement, which is a form that has to be filled out by both sides. Pretty much a budgetary form, and tells you what your assets are. And one of the main things that I look at...
Both parties fill it out, the husband and the wife?
And yes, both parties. What I usually look at is to see what their scheduled expenses are, the fixed expenses, their living expenses, and so on. And what I find to be very amusing is when the male spouse will put on his statement that he earns a net of $2,500 a month, and his scheduled expenses are about $4,300 a month. Right. And I always say
he earns $2,500, but he spends $4,300.
Right. And the first thing I say to the attorney is, tell me how he spends $4,300 a month, and he's certified that it's true, on $2,500 a month. And they never can answer that question. So there's always something, fudgy on that one. I'll tell you one quick
It
case.
behooves him to increase his expenses
Or
on his
be
reform.
truthful about it. I mean, if you're going to spend $2,500, you're not going to be able to have more. Or if you are, obviously, I want to know where the other money is.
Right.
And that leads
It's
on
either
to
deficit
what,
spending like the government does, just borrows money.
Well, the answer always is, well, we borrowed it.
We borrowed it.
I borrowed it from my mother.
family member, the mother. The mother always comes in.
Or Aunt Tilly in Michigan, or.
And I owe it back, but there's nothing in writing.
Have you ever found unreported income, Sharon, doing your work?
Often.
Yeah, how do you find it? Give us an example of what you found.
Well,
and how you found
the
it.
doctor story that I told earlier is that was an easy find. Sometimes it's not so easy. Sometimes we have to use some real accounting techniques. And for example, I had to value an auto repair shop once, and the shop was like a 6-bay garage, and he had 5 full-time mechanics, and he was showing income that I felt was certainly less than what I thought that kind of shop should generate. And I asked for all the invoices for all the repairs, and of course they throw them out.
Of course.
But what they don't throw out are the purchases. So based on the types of materials that they were buying, I could go backwards and try and determine how much the sale should be.
So if he bought 50 carburetors, we sold 50
correct.
carburetors.
As well as if he's got 5 or 6 full-time mechanics, there's a certain volume of work that they need to be putting out, or why is he keeping them on the payroll?
He doesn't need 5 mechanics to do three jobs a day.
Correct. So we do those other type of assessments, and in most businesses there's industry standards that we can get at, and that X amount of dollars per hour should be generated if you have so many employees in different kinds of businesses.
So you become a real financial sleuth.
Correct.
Right.
A little Sherlock Holmes hat, and we go
Right.
sniff around.
Can people fool you?
Absolutely.
Yeah.
They can fool.
Well, tell our audience how they could fool you.
Well, if there's a...
That's what they want. That's what they want to know.
They're very smart, and they have a business where they take in cash and they purchase their merchandise with cash to keep their accounting margins in line with industry standards. It gets very difficult. But sometimes what I do is, if I have a business to value and it's before anybody knows me, if it's a retail type of business, I go there and I see what they do. So one time I had like a fresh produce stand, and I went there to see what kind of register. I bought some fruits and vegetables for my family. I saw that kind of register and how they rung things up and what they did with my money. So I kind of knew their operations before they knew I was there.
So it's hard to fool the sleuth.
Well, we hope it's hard to fool. Right.
Have you ever caught people lying on the stand about unreported income?
Absolutely. I'll tell you one really classic story. I had a business where there was a lot of cash potential in the business, and the husband showed it on his tax return, I think $25,000 or $30,000 a year, and absolutely denied there was any cash involved. The wife testified that there was a lot of cash. She worked with him in the business. At the end of each day, he would take out envelopes and write on the envelopes X to him, Y to his partner, and so on, and broke down between 3 or 4 partners how much they would get and how much would go to the bank. And the deposit slips would coordinate what the bank slip was.
So he allocated the cash among all the people.
That's her testimony. He absolutely denied this. And then
this is what she said. She said he did.
Absolutely.
He said he never did.
She all of a sudden comes in with the envelopes, and sure enough, there's the envelopes with his handwriting on how much he got, how much she got, how much the next person got.
What did his face look like when you showed him when her lawyer showed him?
He wasn't too happy about it. P.S. That was one case I reported.
So you reported that to the IRS. And then what happens when you reported that?
I really don't know. They never get
go
back.
They don't like, by the way, Judge, this is what happened.
Several years ago, I have no idea what.
And you don't get a 10% reward for everything.
Not that way.
For everything they collect.
No.
Another thing we do is look at their personal lifestyle, kind of like what Judge Diamond was talking about with the CIS. So that I had one client whose husband, they built a new house together, and they paid for a lot of the house with the cash that he wasn't reporting. Well, she kept a black book of everything that they paid for in cash. So with the aid of that book, we were able to determine how much more income he really had, and we use that. We also use the case information statement. If somebody says that they're spending that much money, well, we're going to assume they're making that much money.
What is equitable distribution? That's a term you hear about in divorce. What does that mean?
Easy way to say it's a fair distribution of your property. That's property, it's not money. You're talking about real estate, you're talking about cars, you're talking about furniture, stocks, bonds, things like that.
Fair, does fair mean 50-50?
Not always.
Not always.
Equitable.
Equitable.
Doesn't always have to be 50-50.
Who determines what's equitable?
Judge.
That means you. So Neither lawyer can know with any precision what each
well,
party's going to
argue. They'll argue either for 50-50, 60-40, depending on the length of the marriage and the circumstances.
Is it sometimes other than 50-50?
Yes.
Based on?
Based contribution, length of marriage.
Does it matter whether they've had children or not, in terms of?
I don't think that's a fair way to look at it. I don't think whether there's children or not is not the issue as far as equitable distribution is concerned. It might have a bearing on the amount of money that comes through, obviously.
And how do you value, you said it doesn't include cash, the equitable distribution. What happens to the cash?
Well,
you said the equitable distribution includes the non-cash assets.
Well, I'm talking about the non-support assets.
I understand.
If you have like IRAs, that kind of stuff, that's part of equitable distribution. You're dividing that up.
Right.
But not in the support
What
process.
happens to a pension plan when it gets divided up? Because people have a pension plan, it's in the name of one spouse or another. How do you allocate that?
It's rolled over or traded? Well,
yeah, well, depending on the either the decision of the judge or the settlement of the parties, however the pension gets hacked up, so to speak, or gets rolled over, a portion of it, the non-owner spouse would get a portion of that pension. There are several options. They can have it rolled over into their own individual retirement account, which is usually a good option because then they get to control it. They can do what they want with the money.
Do most cases settle?
Yes.
They do. Yeah. So they go through all of this process, this litigation process of discovery and lawyers and make motions and fill out case information statements. And then at the end of the day, they spend a lot of money.
A lot of money. Right, they really do.
And
95% of them settle either before or at trial.
So what's the solution? If they're going to settle anyway and they go through this whole process, shouldn't they settle first before they spend all this money?
You have to know what the assets are before you can reach a settlement. But the answer to your question, in my opinion, if they'd be a little bit more fair and reasonable in their approach and do your discovery without fighting it and get everything on the table up front, it's a lot easier to sit down and talk settlement.
You practiced as a lawyer for a lot of years before you became a judge.
Yes.
Is it in the lawyer's interest to postpone the settlement?
You asking me as a lawyer or asking me as a judge?
Well, in your opinion, from your observations, both as a lawyer and as a judge, in your observations, do lawyers tend to churn or postpone this ultimate settlement?
On the most part, no.
On the most part, they don't. So it's even though it's in their financial interest to postpone a settlement.
Well, it's not postpone a settlement. They may take a little bit longer to get to a trial or to get to the settlement, but it's not really postponing it.
What do you see from the lawyers you deal with?
I think most of them try and move their cases as best they can. I'm not a psychologist, but I also think that there's a certain amount of emotions that the very angry people have to go through before they can get to that point in their divorce process where they have the ability and the ability to be pragmatic enough to settle their case. I think that they have to get through a certain, almost like a death.
They want to be heard.
Yeah.
They want to say
they want their day in court.
Yeah, they're not ready to settle it.
Yeah, they want to be able to spit it out and say, this is what I've said. They want somebody to hear their plight. That's the problem.
I think lawyers have to be careful because they're advocating for their client. I think they have to be guided by their client's wishes.
Is the system generally fair?
Yes.
To both spouses, the husband and the wife?
I believe so.
Yeah. Do you think it's fair to the non-earning spouse, the alimony rules, the child support rules?
Absolutely.
So what could a wife, assuming that the wife stayed at home with children and the husband went off to work, what could she expect in terms of alimony, in terms of percentages? Is that hard a question?
It doesn't work that way. You have to look at standard of living, ability to earn, what's their custom, how have they been for the term of their marriage, long-term marriage, short-term marriage, age of the children, can the wife go out and work?
Those are all factors that come into play.
Yes.
So if the longer-term marriage, the less she's able to work, the more money there is, the more likely she is to maintain a lifestyle?
Suppose the wife worked before children were born, then children were born, she stops. And now 10 years later the kids are in school and she wants to go back to work, but she's been out of training, she doesn't know computers, she doesn't know typing. She can get what they call rehabilitative alimony for a period of time and then work her way into permanent. There's all different ways that, and fairness will be treated to both parties.
And the judges have the discretion to be creative in terms of of carving out a settlement, carving out a decision.
Obligation, not discretion.
Thanks very much. You've been watching It's All About Money. You've been hearing from Judge Diamond and Sharon Maggio on divorce. If you have any questions or information about tonight's show, write to me, Sam Rosenfarb, Rosenfarb Winters and Company, 101 Eisenhower Parkway, Roseland, New Jersey, 07068, or give me a call at 973-618-0800. Thanks very much, Judge Diamond.